Let's try that. Let's try that. See if that works, huh? Sometimes a little restart does the trick, huh? Huh? Oh, can we do the thing again? Well, hold on. Just pretend that didn't happen, man. That's like the girl that fell off the pole in Usher's halftime show.
Oh, okay. Yeah, that was a tough one.
You know, she probably wants to do that again. Does it have something to do with this? There you go.
Yeah, very coming back and doing it again. Appreciate you, trying to give me the spotlight. But yeah, we already know. Oh my God. Yeah. Peter's our winner. Congrats to him. He'll get the $100 e-gift card, not a client. Two-time winner, won at the end of last year.
Oh, he did win.
Yeah.
Oh.
Yeah, he did.
Well, congrats, Peter.
As far as Super Bowl goes, I thought the 49ers were going to win. I don't think that anymore. So I think that's, hand up.
Yeah.
I think that's big. I accept responsibility.
Okay. What's the next game?
Next game?
After the Super Bowl.
I think there's some college basketball today, so.
I see. Well, I hope your team won. Whoever you were, I guess you could only been shooting for the Chiefs there. Bit of a long night, I'll give you that. I do feel a little bit of that as well. I'm kind of a late owl anyways, but welcome to our show. We are financial advisors here. While other advisors are playing checkers, we are playing chess. We're trying to do videos, sometimes it doesn't work there. But hey, if you are getting older and you're starting to see like the RMDs, oh my gosh, the taxes are going to change and stuff. Don't just hold that off, right? Do something about it. I hope you think about that too. Get some help. Find someone that can work through those things because, man, you don't want to give the government any more money than you want to give them because, fun fact, they met while we were all watching the Super Bowl and they had a vote to whether they should proceed with a new bill, which was for national security, but it was actually all money for Ukraine. No border wall, no nothing else, none of the other fluff. It was just for sending money to Ukraine, and it was for more money. This was less overall, but more for Ukraine. So, wherever you stand on that, we know the government just ain't going to spend your money better than you can spend it, even if you have to give it away to charity. All right, let's take a look here. What is your problem?
Eric did a great video on RMDs today. Just went out today.
Oh, Eric did a great video on RMDs. And that's going to go. So there you go. You want to see a little video on that. But, man, they could be trouble. Seriously, they could be trouble. All right. Stock market-wise, I don't have a lot to say. There was this, all this news. There was just none of that. There was really no economic news out today. The day after the Super Bowl, historically, is pretty calm and quiet, just so you know. And that was kind of the case today. Wiggled around a little bit, a couple points here and there. But China also, this time of year, China, they're observing the, Lunar New Year right now. So you got that celebration going on. So overseas, you don't have a lot of activity. And so stock market wise on a day like today, it's kind of like, hey, let's just, the first day back to work, let's just ease back into it. So totally cool with that. The S&P here continues to, at the moment, hold that 5,000 record. It's just a record. It's just a psychological number. It's really not much anything else. What's really interesting is that this is 5 weeks in a row that we are up. But not only that, we're up 5 weeks in a row with weekly gains of over 1%. So this whole 1% gains in a week is becoming more and more common. I don't like that, right? You don't like that for the long term because it's not sustainable. Now, the whole rally itself so far, why? What are we doing? What's going on? Is it just the tech stocks? What's happening? It's important to know because you may want to make adjustments, rebalance in your 401k, your IRA, and things like that. Maybe somebody would push you to do that if that's what you believe in. But we have this sort of euphoria of, oh, they're going to do it. The Fed, we're going to have the soft landing. It's going to be great. This is all going to work out. We also have, fundamentals that are not bad, right? I'm not going to say super strong and all this stuff. Earnings season's been great. Most companies are beating. We're seeing double-digit growth. That's all good. This is very important Because in order for the S&P to trade at 20 times earnings or further, if you wanted to do that, you need to have a environment where there's no recession, right? Nobody's paying up for the market when there's a recession, during a recession, after the whatever. We're not paying up for that. You also, in order to get the S&P to be valued at 20 times earnings, it is historically proven that you need to see double-digit earnings growth. Well, we have that. We have no recession. We have at the moment, we have double-digit earnings growth projected for the year. Okay, now you got something. What you don't have is the ability for the market to just go up forever. That will not happen. There will be pullbacks along the way. Please keep that in mind. Now, inside of the S&P here, there's only 6 sectors, which is really good. I kind of pointed this out last week. This is going to be old data here. Let me just share with you here, though. This is really, really cool because now we're at like 47% overbought and a little bit less oversold. And so what's really cool about that is you don't have an extremely overbought market. I highlighted also last week that there are industries that we could consider overbought, really getting a little extended there, but not all of them, right? And it's not the big guys. So we have a market that is at least trying to broadly participate in a continuation of this rally, something like that. Earnings can throw that off. The good news is we're through the halfway point. We have 78, 79% of all companies in the S&P have reported. Right? So we're getting into real estate, some utilities. We're going to get the retail names. They're not going to move the needle too much, right? Some solar companies will be in there. And so, just not really going to do anything. Now, if we look, or it won't be one stock's earnings that just throw us apart, Now, you could probably guess the tech sector is one of those areas that's overbought. Communication services, one of those areas that's overbought. Consumer discretionary, because of the names in there, the least overbought of all of them, but still technically overbought. Industrials finds themselves overbought. Financials also finds themselves overbought. It just means that you would be paying a higher price relative to the short-term history. That's all that means. There's no magic to it. I'm never going to say I've got some secret oscillator, indicator, whatever. It's just, hey, you're paying a little bit more. You all right with that? And if you are, you move on. Communication services and tech so far this year are the largest outperformers, actually beating the stock market by about 3%, give or take just a little bit there. And if you look on the backside of that, you have utilities, which I find kind of fascinating today. Year to date, it's the most oversold sector in the S&P. Did you see the move today? Did you happen to catch that? Utilities was the best performing sector of the day. Not by much, but it was the best performing sector. Right as, I'm not going to be able to show, I'm thinking of this off my head. Right as the market says, hey, lunchtime, we're going to pull back. Right as that starts to happen, where's the money going? Oh no, I need a discount. There's only one place to go. Utilities. And there you go. You have your best performing sector of the day looking good. Our utility portion of our portfolios was the best performing area of the portfolios today. That's not normal. Money went over there purely just to get a little discount there. That's, you got to justify it. Think about all the people that manage money professionally. Billions and billions and billions at all these various companies, getting into trillions now. And then little old jazz wealth, right? So we can't be telling clients, oh, the tech sector is wildly overbought. Guess what? We just bought a whole bunch of. Now multiply that by all the people that manage funds, whether they're index, well, they can't really do index funds, active funds, large cap, whatever it may be. You got to have a place to go. You got to be able to buy something of value because you lose your job if you don't show that you're adding value. So just as competitive as anything else out there. Okay, if we look at the Nasdaq here, a little bit lower on the day. So the Nasdaq, it got to its record, but it didn't hold it. So it doesn't technically count there. NVIDIA was the only one. Yeah, and it really didn't even do anything, right? So NVIDIA was the only one today that tried to do the work out of the big guys, the big 7 and all that. And that's not going to do it, right? We need them together as a small group to do their thing. Microsoft actually pulled back today. Remember, I don't know if you know, but on Friday, Microsoft hit a new all-time valuation, market cap valuation, right? So it hit a value of $3.12 trillion. The previous record was set by Apple, $3.09 trillion. So for the moment, Microsoft has the record, but is pulling back ever so slightly. Looking through the rest of the markets there, I want to point out the Russell 2000 small caps. Hey, whoa, wait a minute, what's going on out there? Can you see it, right? I don't have anywhere to put money that's obvious. That's what people are saying. But I do have utilities that have pulled back. And, oh, no, I'm not a sector investor. I want to pick an index. Oh, I'll pick the one that's the underdog at the moment. The worst performing index of all of them. Where'd the money go? Right here, right? That's where it's going. You could just see it like plain as day. So people are hunting for discounts as the market gets to a valuation where you're not sure you should be spending more on a price to earnings basis. I'm not sure we should be spending more right now on that. Let's go over here where it's not as expensive. A little more risk, maybe you could say, but so be it. Also, you had interest rates there we go, ever so slightly moving lower. Not really a big enough deal to say that that's the reason that caused all this. I mean, we're talking a fraction of a percent move today. Very, very quiet. Same with oil, very quiet there. And I'll point out gold, after having at least attempt at a little bit of a pullback there, it tried to give you a little rally. Didn't really hold itself today, so I don't have anything exciting to say. Sorry for bouncing around so much. Also got to point out for all you Bitcoin people, yeah, 50,000. S&P hits 5,000, Bitcoin hits 50,000. It doesn't matter, right? Bitcoin is a tradable vehicle. There's no use for it, right? So don't fall for all that stuff. Crazy there. In our notes from Jazz this weekend, every weekend I write a letter for clients there, and we kind of talk about the markets, we talk about the economy, maybe spending patterns, habits, and things that we see out there. Well, we talked about this one in particular, the credit card utilization rate. This is credit cards. This is first and second place for the highest utilization. It's going to be your home equity lines of credit is in second place, and in first place is credit cards. Credit cards now pushing the 24% credit utilization rate. Does that matter? That more people are using their credit cards? It doesn't matter because some people don't mind, right? It starts to matter when they're using more of their credit cards, and they're getting delinquent. They're getting behind. And that's what we see here, pre-COVID levels for 90-day delinquency. So if you're curious to learn a little bit more about that, know that that is in the portal for clients there to review. We save all of our Notes from Jazz emails since day one. So you could literally read through probably millions and millions of words at this point, and that's no exaggeration. All right, let's talk about some stocks in the news here. I'll bounce around just a little bit because that's all you really had today. You had stocks in the news, and then the market just sleeping over here, hung over from last night's events. Amazon, this is not new news, but I did notice Jeff Bezos has sold 2 million shares. That actually went through after earnings, so sometime last week that went through. If you look at Citigroup, Reuters says that, so if you don't know, at the bigger companies, like I'll use Citigroup or Goldman Sachs, JP Morgan or whatever, the Securities and Exchange Commission, they handle regulating all this, making sure that everything's on the up and up. Those companies are so big that they literally have their own office inside their offices. There is someone from the SEC always there, and usually it's a group. It's not just one guy sitting there. So Citigroup has the same thing. They got members of the SEC. Their only job is just this company. They're so big. Keep an eye on everything. Make sure it's good. It sounds a little bit big brothery, but it actually works better for the company, not for the SEC. Inside stuff. Never mind. So anyways, regulators there, somebody managed to get word out to regulators basically, and or to the news, and Reuters came out with the news saying, we think we're going to start to ask Citigroup to change how they measure their risk. And so that was in the news. Not really a big deal. It depends on what they say there. It could be a big deal, but it doesn't, if they're asking for major changes or technological changes, of course, that's costly, but doesn't appear to be the case. Big performer today. Actually, we have a couple clients that work for these guys here. Diamondback Energy has, this is all starting to feel like the brokerage firms, to be honest, but Diamondback Energy is going to buy Endeavor Energy for essentially the same value as Diamondback. If you look at the total enterprise value of Diamondback, I think it's $28 billion. I can't find it as I'm looking around here. And they're spending $26 billion in cash to do this. Why? What is going on there? Just like a couple years ago when Morgan Stanley, you had Morgan Stanley bought E-Trade, right? Because they had the commercial last night. You have all the big names buying up the small brokerage firms, TD Ameritrade and Schwab, right? All these deals starting to take place. Goldman Sachs and Folio. That's why we're with Goldman Sachs. They got bought out. So it's starting to feel like that. Why? It's a consolidation. when times get more efficient, and by efficient I mean less profitable and you want more supply to keep life going there, you start merging. ExxonMobil and Pioneer, Chevron and Hess. Well, these things just happened here, right? You actually, Occidental Petroleum, I think that was today. So I'm starting to lose track of all this. Occidental Petroleum is buying a private company, Crown Rock, same thing. So you have this consolidation inside that industry. Why? Just to get that market share at a lower cost, have lower operational costs, lower headcount, blah, 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 right? All that stuff. So that's what's going on there if you're curious. If not, sorry. Tesla apparently briefly and maybe still has cut the prices on Model Ys here in the States. So that came up there. And McDonald's was kind of the focus of Barron's here this week. They said, hey, after earnings, seeing that drop there, it makes the stock just a little bit more attractive. You may want to learn a little bit about that, see if it's something you want to buy. I'm not saying that. That's what they're saying there. And Meta, I did a little research on this. I thought that was odd. You know how I say that all the time? I'll say like 20%. That seems odd, doesn't it? Yeah, it's actually very odd. What was the reason that stock went up there? They talk about that dividend. First time they ever have put out a dividend. I said, well, what does a normal stock do when they initiate their dividend for the first time? The average performance for a stock that for the first time puts out a dividend is 2.3% on that day, right? So, well, that's kind of cool. Then went through and made a whole list of stocks that have the capability, right? They have bought back shares. They do have high margins. They are very large. So well, what other stocks could there be that could do that? I made a list of 20. We actually happen to own all of them. So pretty optimistic about that. So really cool. And then I do need to clarify one thing. I may be making it seem like there's a lot of buybacks going on, and there are, but relative to last year, only up so far about 6%. So it's not a big jump year over year. It just appears that way because I keep talking about it, right? I don't want anybody getting confused there. So happy to address that. Even when I don't want you guys thinking like I'm, it must be something there. It's just a little uptick. It just happens. It all kind of happen at the same time. Makes it seem like it's a bigger deal than it really is. Okay, earnings tomorrow. And then I'll take your questions if I could see the questions. Okay. AutoNation, Biogen, Coca-Cola, Datadog will report. Marriott, Molson Coors. After hours, your excitement comes from Airbnb, Akamai, MGM. That'd be cool to hear a little bit about that. And a company, it's a REIT called Welltower. I point that out because you want to make a bet? A friendly wager here. Welltower has been higher 8 of the last 8 earnings reports, meaning they report their earnings, and so then the next day it's higher, right? Do they break that record, or does it continue? I find that fascinating. You don't often see that. 8 quarters in a row. Could be more, but I'm only looking back 8 quarters, so kind of fascinating. We'll see what happens there as we get to it. All right, let's see what questions you have, and then I'll get out of your way. I wonder if I can make this a little bit bigger. Help me out. These old eyes. Yeah, not bad. Not bad. You check your cookies. Schwab buying TD. That's right. Yeah, so commenting on that from earlier there. Legg Mason killing you there. I mean, Leggett, not Legg Mason. They had their earning. Yeah, I see that. So remember the other day we were talking about, hey, there was a stock that moved below a range and made new lows in the meantime, but that was it. It didn't really fall apart. And so I was giving you that example of like, hey, that tells you everyone who's already bailed has basically bailed. That's good news if you bought the stock. I'm sorry to do this, but this is a bit bad news, right? The people that were holding on to this stock chose to hold on through the downturn. They now have given up. It's kind of good news, I guess, but see how you break through this low? And instead of just breaking through a series of lows, calmly, like that other stock the other day, this washed out and fell apart. Whole new round of sellers. And unfortunately, yes, that leads to like, oh my God, I got to deal with this, The good news is it finds itself extended, and stocks don't like to be extended, whether to the upside or the downside. So, maybe it's just like hanging in there and seeing what happens. Big lot going to zeros, or big lots going to zero. I don't know how they do it. This is something I've obviously researched over the years here. I've actually been to a lot of their stores too, just because I find it fascinating. that they continue and somehow it's working. So, Doc, I might be a little bit biased on that one. I don't know how they do it. I don't see how they turn it around either. I'm not saying they go to zero tomorrow, of course, but yeah, I don't see. Kaylin says, how's the S&P historically performed once the Fed makes the first rate cut? Is it usually once the economy is already breaking and it's too late? So I didn't do it that way. I've shared this in the past because, am I going to be able to find it fast enough for you? It's way back there. I did it where I said, hey, what happens when the Fed stops raising rates? Not the first rate cut. And there's no reason for that. It's just, at the time we had assumed, okay, this is the peak of rates here, so let's see what happens after. I don't want to take too much time here. All these slides. But that's a good one. We could say, hey, first rate cut, has the market already started to fall apart? I think we're going to find the answer is going to be yes. But that's a good way to look at it. Yeah. Doc, you got a good way of looking at it there. Yeah. It's a different crowd of investors, maybe willing to deal with it a little bit. Dustin says, hey, Dustin, man, what's going on? Do companies start to offer dividends if they expect a decline in stock price to encourage ownership? No, so there's usually a little hurdle that you got to get over. Obviously, the company's got to be large enough to handle it. You've got to have the money to do it. You got to get the board to agree to do the dividend. Then you got to get them to agree on how much, which translates into how many shares. You also have to have margins that are presumed to be consistent, as Meta does, thanks to Temu. And so once you have all of that in place, then you go, okay, we should buy back shares. We've got a lot of money. We should buy back shares. That has the greatest impact to the company, as usually to the shareholders as well, almost always to shareholders. And from that point, you go, okay, what do we need now? We need to become, remember when Apple was this high flying, like, oh my God, every year they come out with something cool. It's amazing. It's exciting. And then they transition into like, just like a Google, which oddly enough doesn't pay a dividend. So you transition into being like a staple, right? Not a consumer staple, but like a staple company. And you say, well, we can't buy back shares forever. It doesn't make sense to keep doing that. It eventually drives the value of our company past where it should be worth it, and then we may be seeing a pullback there. So a lot of times it's just that decision. There's not a talk of, oh my God, the stock is going to fall. We don't want people to sell. You know, that's not part of the conversation. Can be part of the conversation for someone like a Verizon, who now has much longer history here, and they're like, well, what do we do, right? We're not a growth company anymore. So it's usually the first sign that they are moving into the more stable, mature phase of their life instead of being a aggressive growth company. When does the national debt start to count? Apparently it's not now, apparently. Thankfully, I don't have to make that decision. I use the analogy of deer by the lake. As long as we're all just calmly drinking water from the lake, nobody's worried, nothing. But when you see that little ripple from a gator poking his head up and one deer goes, what's up? What's going on over there? And then another deer's like, you see that? Yeah, I saw that. And then they all kind of stop drinking for a minute. That's when we have the problem. When we all stop drinking the water and go, something ain't right. Maybe we should do something. You want to run? I love that analogy. You can just picture the talking deer. Doc, remember when Meta put money into the metaverse? Yep. That's a great example of how the people won right there. You know what I mean? All right, let me wrap it up and get on out of here. I've got a ton of work to catch up on. You know what I mean? And I'm looking forward to it. I like doing what I do. All right, you guys enjoy the rest of your day. Thanks for hanging out with us here. We'll see you tomorrow. Be back again to do it all over again. Adios.